Hello, chart watchers, and welcome to this Thursday, December 14th, Market Watchers Live show with Aaron Swinlin and Tom Bowley. I'm your host, Tom Bowley. Today's show is being recorded, so you should be able to play back any or all of Market Watchers Live at your leisure. If you're unable to attend the show live, you can now go to www.stockcharts.com/webinars. Follow the link to Market Watchers Live and play back the show. Each show will be archived on our site until the next show begins, so you'll have roughly 24 hours. If you'd like to review an older show, you can now find those at our YouTube channel or on Facebook. During today's show, please feel free to submit ticker symbol requests, questions, and comments using the chat window next to the video player. Later in today's show, we'll select stock symbols from your requests, and I'll use those in the 10 in 10 segment at 12:50 Eastern Standard Time, where I'll attempt to annotate 10 stocks in 10 minutes. Market Watchers Live now airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. If you'd like to be part of the show, you can reach us via our chat room or Twitter. Our Twitter handle is at Market Watchers Live. That's at MKT Watchers Live. As you leave today's show, we'd love to get your feedback. In the lower right portion of your screen, you'll see a How'd We Do section with a link to a very brief one-question survey. Let us know what you think of Market Watchers Live, and feel free to provide us suggestions on how we can improve the show. For those of you joining us for the first time today, welcome to the show. We're certainly glad to have you. And for our regulars, welcome back. Just a couple of very brief announcements before we get started. I will be hosting a segment tomorrow talking about price support and resistance. May throw in a little bit of gap support, moving average support, and so forth, and combining all of that. So if you're new to technical analysis, or you just want a refresher, or how I look at support and resistance, mark your calendar. Would love to have you for tomorrow's show. And Chart Watchers, the 2nd December Chart Watchers will be out this weekend. Just had a big Fed announcement, a lot going on in the market. We're getting ready to head into the second half of December, where we tend to see a very bullish action. So make sure you tune into the Chart Watchers newsletter this weekend and just check out what everyone is saying about the market as we head toward the start of a new year. It's hard to believe, Aaron, just a couple of weeks away from another year, 2018, right around the corner. How you doing today?
I'm doing great. 40-degree weather change here. Started at 41. It's supposed to get up to 81 today. Actually, I think it's 85. So,
Wow.
yeah, weather's been really, really weird around here. But I'm doing great. Market's doing all right.
Yeah. I got, this weekend, I'm going to my first NFL game of the year. I'm actually going to go watch the Packers. Hopefully, Aaron Rodgers is back playing the Panthers here in
Ah,
Charlotte. So I'm going to head out for that. And I think the weather here is supposed to actually warm up. It's been a little chilly past few weeks on the East Coast, but things hopefully are going to start warming back up again. I'm ready for spring already, but
oh, yes.
probably still a little ways away from that. I know we got an action-packed show. We got a ton of charts we're going to get to everybody today. So I'm going to let you take it away and go over the agenda and that first market update.
All right, sounds like a plan. So today we've got a lot of segments set up for you. I think you're going to love them. We're going to do our technical headlines, of course, first and foremost after the on the hour market updates. We have a new segment, so you have to give us some comments on what you think of it under the radar. And we'll explain that segment more when we start it. Momentum sleepers. We're going to go over a few charts you probably have forgotten about but need to see. And the 10 and 10 to 1, we're going to start with Dick's Sporting Goods, DKS, as our first symbol to look at in the 10 and 10 to 1. So you can go take your own notes. And then the ever popular anatomy of a trade. We're going to go through either a trade we've made or in my case, because I don't trade quite as often as Tom, a trade we're considering. So, and what we would do with it. So that's kind of how I'm going to be looking at that. And then, of course, we'll have time, hopefully, for some questions from the live chat box and any that we've received in the email. So with that, I think it's time to get into our first market update. All right. So let's start with our headlines, which is in the predefined alerts box that you'll find on your member homepage. And at this point, we can see technology is doing well. You've got the NASDAQ crossing above 6,900. The Dow has set another all-time high. I think it's pulled back since then, but we'll take a look at the candle glance. And Russell 2000 also having a good day. Healthcare is healthy right now. We can see that the bullish percent index has crossed above 70. And then we also have the NYSE is looking pretty good right now. With that, I do want to show you, since I have the NASDAQ 100 chart up here for DP signals right now, it is the only red arrow currently. And since we're now seeing the NASDAQ cross above the 6,900 level, I think we should take a quick peek at that chart. And then I'm going to get right into our candle glance. So let's take a quick peek at the NASDAQ and see what's going on. So as we can see, we managed to get into a nice intraday high, but we're not quite on the all-time highs yet for the NASDAQ 100. Starting to look decent. I don't like the way it's curving over, but at this point, we do see that PMO buy signal is in the works somewhat. We're seeing mostly flat momentum, but with this last rally on the NASDAQ 100, I think we're going to be okay. Let me go over to our candle glance quickly here so we can see what's going on with the rest of the market. And again, the Dow set a new all-time high here earlier in the day, but has pulled back. And now we're looking at it rallying off of yesterday's close at this point. The S&P 500, very volatile day. And we're getting a rally now off of yesterday's close, but we did dip below it for a small amount of time. NASDAQ has been in the black all day today. It's continuing its rise, but it has pulled back somewhat from its earlier high of the day. Russell 2000 and small caps not doing so well, staying on the negative side. Does look like they're trying to get themselves right back up over yesterday's close, but currently with this broadening pattern coming out, those are usually bearish. Hopefully we'll get a bit of a move to match what we're seeing on the other indexes. Wilshire 5000 also bounced off of yesterday's close. Treasury yields up slightly at 23.71. UUP, we're seeing a flag formation here on UUP, so it'll be interesting if we can get some rally off of that. Commodities making a double top right now. So we'll have to see if that executes at the neckline, which would be yesterday's close. USO is up slightly, forming a flag, it looks like. So we may see higher prices there, currently reading at 1135. Gold is down slightly, reading right now GLD at 118.83. And the VIX is now, it's gotten itself above 10. Now we pull back so that it is about 10. But definitely seeing slightly higher readings on the VIX than we have. Declines are leading advances at this time. And with that, I'm going to conclude our first market update.
All right, thanks, Aaron. Let's take a look at some of the technical news and headlines for today. First of all, some of the big news has already come out. We had the Fed that announced yesterday that we were getting a 25-point rate hike, and the Fed also announced that they're still looking at the possibility of 3 more hikes in 2018. So you can see yesterday we did have the 10-year Treasury yield get up to about 242.5, 243 before pulling back. It's up slightly today. We did have some additional economic news out this morning. Initial jobless claims, 225,000 versus the 239,000 that the market was expecting. So that was a little bit of good news economically. But the big one came in with retail sales. November retail sales up 0.8%. Market was only expecting 0.3% rise. And October's retail sales were revised from 0.2% to 0.5%. So these were some big numbers coming out of retail. The November retail sales minus autos. So if we strip out the autos, November retail sales actually gained 1%. The market was only expecting 0.7% rise. And then again, looking back at October, the number was revised up from 0.1% to 0.4%. So some pretty big revisions to October's numbers and then some pretty big beats in November. And so if we take a look at the XRT, what I'm seeing is a buy on the rumor, sell on the news type of deal. I mean, technical analysis works. And you can, look now and say, well, retail sales really picked up. The chart told you that folks were expecting retail sales to pick up. That's why these retailers have been doing so well for the last month. But this was a big move to the upside. A lot of this was anticipated. And as a result now, with the news coming out, I would not be surprised to see a little bit of a pullback, although I think this rising 20-day moving average here is probably going to offer up some really good support on any pullback. I suspect retailers will continue to do very well based on this breakout, and also looking at the volume. I think that this is an indication of a lot of accumulation in this space. And remember, retailers were kind of ignored for about the last 2 years. No one wanted to touch a retail stock. That's all changed here in the past month. So I would expect to see pullbacks being bought in the days and weeks ahead. So that's something to keep an eye on. I want to talk a little bit about the Russell 2000 because it has been lagging. And I've been writing a lot about the historical performance of small caps. And typically they don't perform well in the first half of December, but they perform exceptionally well in the second half of December. And it is December 14th. So we're getting very close to that threshold in the middle of the month where all of a sudden that faucet gets turned from cold to hot. So we'll have to see whether or not that develops in 2017 as well. I'm going to pull up a seasonality chart and first just show you on the Russell 2000. If you haven't seen this before, it's pretty enlightening. But if you go back over the last 20 years, you can see that December has averaged going up 75% of the time. And the average gain in the month of December is 2.8%. And compared to every other month, you can see that that is clearly the best month of the year. The other way you can look at this is to compare the Russell 2000 to the S&P 500. And this is a chart that will tell us, first of all, how often the Russell 2000 outperforms the S&P. And over the last 2 decades, it's outperformed 60% of December's. And then down at the bottom, and I think this is a really big number, this is the average return in excess of the S&P 500. So in other words, the Russell 2000 has averaged gaining 1.4% more than the S&P 500 during the month of December over the last 20 years. And just to kind of drive this point home a little bit further, I want to go into my blog today because I posted under historical tendencies, this is the daily annualized return. So it's each calendar day of the month of December from the 16th through the 31st. Here are your annualized returns. And when I look at these numbers throughout the year, if you see one day is up 70%, the next day is down 70%, the next day is up 50%, the next day is down 50%, there's no discernible trend. But when you look at these numbers, December 19th is the only down day in the second half of December for small cap stocks. Looking back, and this goes back to 1987, by the way. So this is going back 3 decades. What I was showing you before on the seasonal patterns only went back 2 decades. So you're getting even more information as we go back 3 decades. And when you look at these numbers, this is astounding relative to at any other point during the year. So there is no doubt that the Russell 2000 historically is entering the most bullish period of the year. Now, this does not guarantee us that it's going up in 2018. Or 2017. I don't want to, put that out there, but it's also fact. This is what's happened over the last 30 years on the small cap index. So right at the end of it, I just said, feel free to draw your own conclusions. And so you can look at that and ignore it. You can look at it and maybe purchase the IWM, which is the ETF that tracks the Russell 2000. Completely up to you. Make sure you analyze the risks and so forth of those investments. But I thought it was certainly worth sharing the numbers. So this is a pretty interesting history, and the fact that we know that it outperforms the S&P 500, and it does so with these astounding annualized returns by day. I don't know. I think it's at least something to consider in your strategy as you go forward and head into the end of 2017 and into 2018. A couple of charts that I put into the blog, and I want to talk about these. I've said that the biotechs, to me, look like we're starting to turn back to the upside. And what I was referring to was after this gap down, you can see that we're starting to turn back to the upside, and we have taken out the declining 20-day moving average. That normally doesn't happen if you're in a downtrend. When you've got these lows being put in and the MACD looks as bad as it did a few weeks ago, for this index to come back up above the 20-day moving average, I think is very bullish. And the other thing, I'm going to go ahead and pull this up on a little bit bigger chart. I think I might lose oh no, I kept the annotations. So what I did is I took these lows and I said, okay, let's paint the bearish picture first for the biotechs. And so here was the lows. And if you just draw a line along here, and then with the annotation tool, you can actually hit the command and the left clicker and drag the line up so you keep the same slope of the line. And if I dragged it right to the top of where we were in October, notice that it comes in and hits right at gap resistance. This 2025 level, I think, is pretty big. Today, we saw 2017 on the high, so very close to that level. And so far, we're selling off. Now, the rising 20-day in an uptrend should provide some support. So I think this is going to be a very interesting area to watch, the biotechs, in the very near term. I think we're going to go higher. And the reason I say that is that I'm looking at a weekly chart. The weekly chart looks to me to be much better than that short-term chart. And when we broke this 1800 level back in July, I said that these biotechs move very fast. Don't be surprised if we make a quick run up at the high in 2015. We almost got there in 4 or 5 months, but we've pulled back. We've hit that rising 20-week moving average. And to me, we're starting to turn back to the upside. So I see a bullish long-term picture here still with the biotechs, just realizing, though, that on a daily chart, if you want to make a bearish argument, we're going to have to take out that 2025 level to really bring this longer-term chart, the bullish implication of the long-term chart, into more focus. So those are some of the areas that I would be paying attention to. So with that, let's move over to the Under the Radar segment. As Aaron mentioned, this is a new segment. It could be defined in a number of different ways, but the way we're going to approach it today is we are going to feature stocks that are showing a lot of volume relative to their average volume. So it's not necessarily the high volume list. We're not going to see what's the highest volume stocks on the S&P 500 or on the Dow or on the NASDAQ. Rather, we're looking at the ones that are producing the biggest swings in volume from their normal volumes. So these are going to all be stocks that are showing a lot of volume today. So I'm going to go ahead and start off with just a few of these stocks. And first, let's pull up Alibaba. BABA, and you'll be able to look down and see the volume on all of these charts that we're pulling up, and you're going to see it's going to be a pretty big volume day. And so Alibaba with heavy volume, first of all, note that the MACD has now clearly gone down below centerline support, which is something that we hadn't seen throughout 2017 very often. We had a little dip here back at the end of October, held on to price support, and then simply moved to the next level. Here we came down, though, and on pretty good volume. You can see this hollow candle at about 165. And if you go back after this breakout in August, that 165 level has been the lowest level. So we want to see that level continue to hold. But on the bounce, we failed at the 20, and now we're starting to turn back down, and the volume is heavy. So we want to watch that 165 level really closely. I'm still a fan of Alibaba, but we want to keep these support levels in mind. I also wanted to show you that on the weekly chart, we're now testing. We're at this 20-week moving average, and you can see throughout 2017, we really hadn't even had any tests until just these last 2 weeks. The good news is so far we're holding this rising 20-week moving average. The bad news is if we do bounce one more time, watch the volume, because we're already starting to see weakening momentum on the MACD. So you can see that just tells us price momentum is slowing. It doesn't tell us anything about volume. So if we start to move back up and test that high or maybe even break out, you're going to want to make sure that volume confirms. If it doesn't, I would be really careful on that next move to the upside. So Alibaba, I thought, was one that's kind of under the radar that we need to keep our eyes on. Twitter's actually making a big breakout today, or trying to. And again, look at the volume already picking up. It looks to me like the volume is the heaviest we've seen perhaps over the last month already. And we still have another 25 minutes to go just to get to the halfway point of the day. So Twitter's trying to make a big breakout. And you might say, well, isn't there negative divergence? And I would say, yes, on this breakout, technically there is. But the MACD is turning higher, and we don't know where this move is going to go. So I think if it makes the breakout on the close today with very heavy volume, I think you've got to continue to respect this from a bullish perspective, so long as it holds this rising 20-day moving average going to the upside. So I'm pretty bullish on Twitter here, but we need to get this confirmed breakout. If we leave that long tail up there and we come back down and we close today below 22.5, my guess is that we've probably hit a short-term top and maybe one more move back down to test that 20-day moving average, and this trend line might be in order. So that's something to keep in mind on Twitter. And then one final stock that I have here, and I think many of you who like to trade stocks and probably is going to recognize this symbol, RIOT, Riot Blockchain. I think we talked about this one earlier this week. I think it was on Monday. And remember, it had gapped up and it was trading somewhere around 19 and a half midday on Monday. And we talked about the possibility that this one could quickly run up to the 24 level, which it did that day. And then you can see with incredibly heavy volume, we made the breakout. I don't like those tails, and this off of a major uptrend. You might say, well, it's only 2 days, but I would argue from $14 to $34 is a major uptrend, even though it only occurred over 2 days. But leaving that long tail is typically not a good thing, because with this kind of volume, to me, it means you've probably got market makers on the short side of the trade. And sure enough, we did gap down the next day, and we're kind of just consolidating. But I think 24 is key short-term support. And if we fail to hold that, I think the rising 20-day and the top of gap support down in the, let's call it 18, 19 area could come into play. So you want to be real careful. It's hard to manage risk in a stock like RIOT because the moves are just so wild. If you try to keep a tight stop, you're probably just going to get stopped out. So I wouldn't trade this unless I had, unless I have a really strong stomach and willing to take on an inordinate amount of risk. It's a great potential move to the upside, but I think you got to be really careful.
I know I don't have the stomach for that kind of thing.
No, I don't either.
I just don't.
I'm pretty aggressive, but yeah, I'd have to get this thing at an absolute perfect level. Just sitting in the middle of a range like this. I mean, you saw how quickly this stock went from $14 to $34. And just a few weeks ago, you saw how quickly we went from $24 down to $12. And so just when you think there's no way this stock could make a drop down to test a rising 20-day, 3 days later, it did it. Lost almost 50% in the process. So it moves wildly in both directions. But I'm going to let you go ahead and take a look at yours.
Have fun. Before you drop this, a lot of people are asking you how you found these. Do you have a scan that you ran or?
Yeah, under the radar, like I said, it could be a number of different things. But what I did is I ran a scan that just showed unusually heavy volume. So all I was doing was running a scan against all U.S. stocks. So, I didn't include Canada. I probably should have. But in this particular scan, it was all U.S. stocks. And I ran a scan of volume that was at least 1 times its average volume. So in other words, all of these stocks have already done at least their average volume for the day, looking back over the last 90 days, and they've done it in less than half a day. So these are all going to be stocks that are among the heaviest volume. So under the radar, the name kind of implies that, some of these now, Riot and some of these others, and a couple that I think you're going to talk about, Aaron, are favorites of traders. And, it just so happened that we, Baba and Twitter and Riot are some pretty popular stocks, but there are also some stocks on this list that came up that, are maybe even further under the radar for some traders that otherwise you may not have ever, heard anything about. So if we have some time, maybe the next time we do this segment, we'll try to look at some stocks that are even further under the radar.
Sure. And we can look at your scan language so everybody can figure out how to get it together. All right. So Teva, that's the first one that I have for under the radar. And, at this point, of course, I would be a little concerned about an overbought PMO, but really nice how we got that rounded bottom here on price. We're getting ready to test some overhead resistance up here at 20. I think this looks pretty good. Look at the 20. It's just about ready to close here to finish above the 50-day EMA. That would give me an intermediate term trend model buy signal. And that's the first time we'll have seen the 20 even close to the 50-day EMA, let alone giving us a buy signal on that. So, and look at that volume bar. You're right, Tom. That was one that was really moving. You could see on the OBV too, volume is moving in the right direction. So we want to see that as we come out of that rally, and we're doing that. A little blip on the radar here for the scooter. So not doing quite as well as its counterparts.
Hey, Erin.
Yes.
On this Teva chart, if you scroll down a little bit more and you look at that OBV,
yes.
I mean, I know the OBV is still well below where it was in August, but do you draw any conclusions from the fact that it's above where it was, say, in September and October? It's above those levels, but the price hasn't gotten above. So does that?
That's actually, I would consider that a positive divergence. If you're seeing, rising on the indicators, typically we do look at bottoms though when we start measuring for divergences, but you could see, I take that into account. But with the OBV, I kind of use it a little bit more short term because I am looking for those divergences and, how those are stacking up in the thumbnail more than anything, because I use it a little bit more as a shorter term indicator.
Okay.
So that's sort of my look at that. But surely you can do that. And look at this perfectly wonderful positive divergence here. This is what I mean when you're looking for positive divergences. You compare the bottoms of the indicators with the price bottoms, and look at that perfectly lovely positive divergence here. Your price bottoms are getting lower, but your indicator and momentum is moving higher. And so that's what we want to see on something under the radar, I would say. Let's see. I think I have time for two more. And here we go with VRX. And, really nice move off of this area of what was overhead resistance. We're seeing it punch up really nicely, possibly forming a flag formation. The only thing I'd be a little concerned about, Tom, here is just the angle of ascent here on this particular stock. So this VRX obviously has a much better look than Teva. This is a lot stronger than it's leading the pack here when you're looking at scooter above 70. So this has a nice high batting average, as we like to say. I would probably look at the weekly chart real quick just to give us a feel for the intensity, so to speak, of this particular breakout. And I'm going to annotate it really quickly just so we can see what I'm talking about. Oh, we need something darker than that. Okay. So you can see that breakout. And really, I think that we're looking at a reverse head and shoulders here after a really long decline. And that is quite positive as well. And where's the next area of overhead resistance? Not until we get all the way back here. Whoops, got the wrong annotation tool. Just move over here. So, that's your next area of overhead resistance. And we're talking about a pretty sizable move here on Valiant. And your PMO on the weekly chart is not overbought. So if you're looking at this as more of an intermediate term trade, which I do, this does have some potential in the intermediate term for sure. And I think I have one. Yes, I have MYL. So it's also in that same space. I want to get this in our Market Watchers chart list here. All right. And so the last one is MYL, Mylan. Really pretty breakout. See, I like the PMO setup here for a short-term trade a lot better, mainly because I just got the buy signal. We're not overbought. Beautiful breakout. I mean, this one needs to be annotated because this is really pretty. Look at that. That's a really strong area of overhead resistance. Look at the areas where it's had trouble at this at that 39.50, I guess, level. And now you're looking at that breakout, very strong breakout. The next area of overhead resistance isn't until really you get up here. I mean, if you want to look at a more short-term target, you could use these two tops and look at it from that respect. But the setup is really quite well, is good here. You've got rising bottoms, rising bottoms on the price chart. So this one looks good. Look at the scooter. It's starting to make some moves as far as its counterparts are concerned. So both of those last two look pretty good. I'm not a huge fan of Teva, but I think these are ones that definitely deserve a space on some watch lists. And with that, I think it is about time. We're going to move into, and it sort of follows on nicely to what we've just been doing, and that would be momentum sleepers. So what we looked at under the radar were high volume movers. Now what we're going to look for is momentum sleepers. And Tom and I have slightly different definitions. So Tom, I'm going to hand over the momentum sleepers to you first, and I'll get my charts ready.
Oh, okay.
If that's all right.
That is fine. Let's see here. All right. So the way I look at it when I'm trying to find a momentum sleeper is I try to find a group that's in an uptrend, but simply has been ignored recently. So it's been pulling back, and we've seen momentum or money rotate away from this group and into other groups. And so one of the areas is the home builders, the home construction index, the Dow Jones US HB. And you can see after being in a steady uptrend, and literally over the past 3 months, we haven't even seen as much as a 20-day test. So this thing was just parabolic, almost just straight up. And so finally, over the past couple of weeks, we've seen this group pull back. And I'm not going to say it's a forgotten group because it's still way up over the last 3 months, but it has at least finally pulled back and tested a key area of support. So for me, it's almost like a little bit of a giant where it's been a great performer. It's pulled back. Now it's at a key support level, and perhaps we'll get a short-term bounce from this level. And by the way, that's what I would be looking for here. Short-term, you can see the MACD has really taken a hit. So this next move to the upside will be really interesting to watch. If it does move back up and possibly break out, it's going to do so with an ugly divergence. And that could lead to some sideways consolidation or even further selling. So short term, I think this is setting up. Longer term, kind of, I don't know, might be a little bit more difficult. But within this space, I was going to look at Lennar because Lennar looks very similar. Last 3 months, great move here. I think if we look at a weekly chart, and Lennar is one of the stocks that I've suggested is one of the stronger home builders. When you look at a long-term chart, sideways consolidation here for a couple of years, and we just finally, in the past couple of months, made a very significant breakout. And notice the last significant pullback tested that rising 20-week EMA and also price support. So this level of resistance around 54 held on as price support. We tested that along with the rising 20-week EMA, and we bounced right off of it. Weekly momentum continues to accelerate to the upside. So I think this is an interesting stock. And again, when we look at a daily chart, we finally gotten a pullback to test a rising 20-day moving average. And on this recent selling, you can see the volume was just, very light compared to what we have seen previously in the past few months. So I think Lennar is a sleeping giant for a short-term trade, maybe a move back up to 63, 64. And from there, we'll kind of reevaluate because, again, just like the DGA USHB, we do have a MACD that is pointing down. And whether or not, it starts to turn up with another breakout remains to be seen. And this is a perfect example, too, by the way. Here was a breakout right in here. And notice the MACD was way lower than it was back at the end of October. So an incorrect call would have been to say, this is a negative divergence. I better get out. Remember, when you're first making these breakouts and the MACD is just turning up, you don't know how far this is going to go to the upside. So unless you see a reversing candle or unless you see a failure to hold price support on a breakout, I would be careful about making an incorrect, premature decision on the momentum of a stock when it first makes a breakout. I think that's a big mistake with the MACD. And as you can see, by the time we got to the top here, there was no negative divergence. So if you used it, even worse yet, if you use that negative divergence as a reason to short, you can see the pain that would have been involved in that trade. So for me, MACD is secondary indicator. Number one is price volume. So if I'm getting a breakout and I've got good volume, better than average on the breakout, to me, the negative divergence is a moot point.
Yeah, and that looks like a nice flag there that that it's
Yeah.
as well.
Yeah. And so we could just be in this flag. We might be in sideways consolidation for a while. It might be that this MACD, makes its way all the way back down to center line support. But I do expect at least one more test of the 63, 64 area, and we'll see what kind of volume. If it's light volume on that move, I'd be tempted to take profits on it. The sideways consolidation. Eventually, we're going to get this MACD back down to center line support. I mean, you can see here when we had this big move up and the MACD took off. Eventually, you go sideways and the MACD will come back down. That is the one thing that you can count on from these momentum oscillators. They don't, it's not trees growing to the sky. They move up and then they come back down. That's the beauty.
Well, that's the definition of an oscillator, really. They have to oscillate as well, because
Yep.
a lot of people kind of like, well, how come it's moving down but price is moving up or sideways? Well, it has to oscillate. Even if things are straight across, it'll oscillate.
Yeah, and the MACD is the difference between two moving averages. So it's not a, it's not a magic potion or anything. It's just it's a mathematical formula. So as prices move up, the short-term moving average pulls away from that longer-term moving average. It's just mathematical certainty during an and so when it sideways consolidates and it rests, you can see that the longer-term moving average catches up, and that just brings it back to center line. So that's where we are right now. Yes, we're overbought. We've been in overbought territory, but I think off of this rising 20-day, we may be looking for one more pop. The other area of sleepers, I think, could reside in semiconductors. This was a really hot group, and you can see over the past few weeks, the market has just been tossing these stocks to the side. I tend to salivate when I see this. I love a group. I love a group that's going up on heavy volume, because to me, it's a sign of accumulation. This group did not pull back or consolidate at all. I mean, this thing was just straight up. And then finally, when the dam broke and this started to lose the 20-day moving average and so forth, you can see a lot of folks in at the top started panicking. And check this out, by the way. Higher prices, lower MACD, failure to hold the 20-day. And now look at that oscillator back down, actually even into negative territory. But I think there's some pretty good gap support here between 3,100 and 3,150. And so you can see all these tests down here trying to hold. A move back up above the 20-day, I think, would be very interesting. And I'm just going to throw out a few stocks in the semiconductors that I think look pretty interesting. First one I own. So full disclosure here, KLIC. I think the gap support, 50-day moving average, looks really good. I think it's just consolidating. Again, a break above the 20-day moving average, particularly on increasing volume, is maybe something to look for here. MKSI, and by the way, KLIC is one of the smaller semiconductor stocks, so you have to understand these small stocks carry a bit more risk. MKSI, though, I'm going to annotate this one because you might look at it and say, well, why would you like this one? Well, pretty close to a price support level. So here was a prior high. Here was your breakout, a test of this level. And now notice when we came back down and we held, we went right up to the 20-day, which is where I would expect it to fail. And now we are consolidating in this range. I think the closer it gets down to the 87.5, 88 area, I think the better it looks from a reward to risk standpoint. And what you're looking for is to climb back above that 20-day and start trending above it. So we're not there yet, but again, this is momentum sleepers. Had a lot of momentum, and I think it has certainly been sleeping now for the past few weeks, maybe even several weeks. And so this is one I would keep an eye on. And the last two, these I think you're going to recognize. First one is Texas Instruments. This one really hasn't even paused. It was breaking out earlier today. Let's see. Yep, still trying to make the breakout. Decent volume. This one is, we were just talking about how these oscillators, if a stock consolidates for a little bit of time, you can see how these oscillators make their way back down to the center line. So it doesn't always require a lot of selling. Sometimes it just requires it to just pause for a little bit off of this big move to the upside. But again, you can see higher prices, lower MACD. There's a 50-day test, got close to the center line, and now we're starting to see a breakout again. So this one had been sleeping, but it looks to me like it's trying to make the breakout. And my final one is Intel. And I wrote about this in the Don't Ignore This chart, but I think that this gap support right here at 43, huge move to the upside. MACD was really extended. It's all the way back now to center line support. We've hit the 50-day. We're at the top of gap support. I believe Intel is going to turn around. It could be from this level. I would say there's even a chance it goes to the bottom of this gap support. but 41 to 43 should provide some really good support for this semiconductor giant. So I'm going to turn it back over to you,
I
Erin.
like that. Both support areas of the 50 and the gap support there. I was calling certainly calling a pullback or a correction after we had that huge parabolic quick move up, and it did end up topping there, so I can pat myself on the back for that one. But it's it didn't fall quite as quickly as you usually see out of a parabolic. So the fact that it didn't, and now it's finding those two areas of support, I think is certainly promising. So,
and I think too, Intel is not your typical type of stock that goes into parabolic moves,
right.
because of some, I don't know, some crazy news because this thing's going, it has a product that's going to sell, and margins are going to explode. I mean, Intel's been around a long time. I think everybody understands that. I think the fact that Intel just went sideways for a while the rest of the semiconductor group was taking off, I think maybe some of that was catch up, but we'll find out whether or not the 43 level holds. But what do you have?
All right. No French fries for that ketchup you mentioned, but all right. So for me, a momentum sleeper is one where, because the PMO, I think, is such a great measure of momentum because of the way it's calculated. And if you need more information, go to Chart School or go to our Market Watchers live recap blog. And at the bottom of all of the articles are links to all of these indicators that we typically use. So what I liked about this, so I'm looking for one that's turning up. This one I like because it's turning up above the zero line. And, you want to see a PMO above the zero line. That tells you, similarly to the 50 being over the 200-day EMA, you want to see that bull market sort of configuration. So at this point, I do like that PMO setup. The scooter's fairly strong. We have a double bottom here. I think you can make a case for a breakout occurring from that I'm sorry, declining tops trend line. Get my words together here. So with this double bottom, if we can actually get up here to 11 and get the breakout, that would get this double bottom in start working. And interestingly enough, you measure the pattern, add that to the breakout, and where does that bring you? Pretty much right to overhead resistance up here at looks like 1175. So I thought that was a nice sleeper as far as momentum. It's been falling for so long, and so I like to see those switches in momentum. So that's BlackBerry BB. The next one I have for you is CORT, CORCEP, CORT for the symbol. And again, I'm looking for these oversold turns on the PMO, and I want the 50 above the 200. Other than that, I'm not really minding it, because as Tom says, we're sort of looking for those that have been sleeping, kind of moving sideways or in a slight downtrend, but are showing a move as far as momentum is concerned. You're seeing these EMAs turning up. So at this point, nice rally. I like the fact, and I think you could make the case for a declining wedge. And these are positive bullish patterns. If we get the breakout above 18, I'd say a little bit higher, 1825, that would execute the pattern because you're supposed to expect a breakout. Now, with wedges, you can't really do a true measurement. A lot of people will measure the end of the particular wedge and then add that to the breakout point. I don't see any reason why you couldn't, but I would be looking more at that just below $21 as your target. So I thought that one was pretty interesting. And then I had two more. Here we go. I love this chart. I thought this was great. It's definitely making its turn, I would say. And look at this flag. Oh my gosh, textbook flag. You've got the flag is actually kind of trending lower rather than sideways or even in a pennant. So I like to see that. And look at this declining tops trend line. I drew it mostly off of this top back here, and of course these previous ones, and it just lines up so nicely. It had the breakout from there, and now it's forming that flag on top of that declining tops trend line. And the PMO again turned up above zero, which is a good sign. and it still has some margin to cover. And the EMAs are just nice. They weren't really set up the best, and now you've got that 20-50 day EMA, the 5 and the 20-day EMA positive crossover, and that is a buy signal in the short term. So I like the configuration as far as the trend models are concerned. And OBV, not maybe as exciting to see these tops in decline with the price tops, because that's a bearish confirmation. So I think you would have to use some caution here. I'd probably be looking at the 26, maybe 25, 90, just above 26 is my stop on this if I wanted to get in right away. And then watch it. If it fell below that level, I really wouldn't want it anyway. But if we get the breakout from that flag, then I'd be very happy to be holding it, and I would be looking for that move up to that $29.50 or $30 area. And I have one more for us before we get into the 10 and 10. We're on such a great schedule today, Tom. I'm so proud of us. All right, so extra space storage, EXR, another flag formation. Not as pretty of a flag as we saw on the other chart there, but and I say that because it's a little bit more messy, kind of straight across. It's certainly not very long at this point, but I like the fact, I keep saying I like the fact, that's my thing. You've got these PMO bottoms rising along with the price bottoms. So I think that's something you want to see. That's a nice bullish confirmation for us. We got that pullback on the PMO, so it was not overbought anymore. It's turning up on these previous tops, so higher tops and readings over here, which I like. So I think that the indicators are looking pretty good here. Today's trading is below overhead resistance at this point. We only managed to pop up above it, and we didn't even close above it. So again, you'd have to decide where you want to set your stops, but I think there is certainly some upside potential here. And I always like to look for flags because you can get that minimum upside target. And in this case, we're looking at, maybe a $3, $4 move up from that $87 movie. So that puts you in the low 90s as a potential on this particular one. So I was asked, what do you think about the Bollinger Bands, as far as it being above it? And I think there was, there was another, the candle, the way the candle looks directed at me. Well, I don't use candles because I'm not a short-term trader really. And obviously I don't use the Bollinger Bands. And, the main thing, those are great. Those are great indicators. But, when you find your sweet spot, so to speak, where you're finding some success using what you use, I don't add extra stuff. It just I don't need confirmation after confirmation. I just need to see what I'm seeing right here. I like my trend models, I like my PMO, and the way I follow volume is I use the OBV. Yes, it's old fashioned, but that's what I grew up using, calculating with an actual calculator on graph paper. So I'm familiar with that indicator. And then, of course, I absolutely adore the stock charts technical ranking. And after I saw Greg use it and put that 75 line in there, I thought that was it's a brilliant indicator. And again, you can find the link to the Chart School articles at the bottom of our Market Watchers recaps. So that's that pretty much, I think, answers that question. So in this case, I would be a little concerned about the fact that we haven't really been able to break that overhead resistance area, but I like this setup on the PMO. I would suggest that it will get that breakout. And then if this is a true flag, like I said, we would be looking at a target in the low 90s. So that's pretty good setup, I'd say. But in my opinion, it was sleeping because the momentum was just falling. But when it turned up, we found that we had really good momentum setting up on this rally. And now we're getting the pause. And, we always talk about that pullback or pause. So anyway, that's my spiel. And I guess at this point, Tom, I think we should move into the 10 and 10, and we might actually finish it on time. We'll have to see.
Let's do it.
All right. Oh, before I do that, though, I wanted to show you very quickly what we just talked about, so that if you need to write down those symbols, you'll have those right here. So these were our momentum sleepers, and if you're watching this show later, there you go. So anyway, okay, Tom, 10 and 10. Let's do it.
All right.
So first was Dick's Sporting Goods. So that's right off the bat.
All right, so DKS. Well, first of all, it's in an improving space. So I like the fact that we have started to see much more buying in retail. So that is certainly going to help this stock. If you get a lot of money moving into retail and your stock in retail still isn't doing well, that probably is a pretty good sign technically that you might want to look for something else. I think there are a couple things to watch here on Dick's. The big one being the huge volume gap down came from about 34.50 back in August, and we are now making our way up. I love the fact that we are holding on to support. If you look along this 20-day moving average, that's what you want to see in an uptrend. It always makes me a little nervous when I think a stock is breaking out and it comes back, hits the 20-day and doesn't do anything, doesn't bounce. That's normally not a good sign. But in this case, we did bounce. We did move up. Volume, though, has been lessening. And even though Dick's has improved, I think you can tell that this is not a great part of the retail space. So I'd be watching that 20-day moving average closely to the downside. And the key to the upside is going to be around 34.50.
Okay. Number 2, we will do the ever popular Apple.
Okay, well, Apple certainly looks good to me. Still continues to consolidate sideways. So even though the market's been, the Dow especially keeps pushing to all-time highs, and we're not seeing it on Apple, keep in mind Apple kind of moves a little bit more with the NASDAQ and many of the technology stocks, and they have been, there's been some rotation away from technology. It's starting to come back a little bit, and you can see that even here on Apple over the past week and a half. But I think we're in the midst of a sideways consolidation off of an uptrend. The move to the upside was on very heavy volume that you can see here at the bottom. So I would just watch these levels marked. I think maybe 175.5 to 176 is pretty key resistance. To the downside, you can see 167.5 has marked pretty good support in terms of both price and gap. And throughout this consolidation, check out the MACD working its way back down to centerline support. And check out the overbought RSI, which had fallen back to about 50, still currently in the 50s. So I think Apple is in a much better position now technically than it had been, but we're waiting the breakout. We got to see that 176 level cleared and increasing volume to confirm that breakout.
Okay, your third symbol is going to be Gilead, GILD.
Yeah, I talked about the biotechs earlier, and I do think that they're improving, but we have a key area of resistance that Gilead is trying to get through right now, Gilead, and that is at the 50-day moving average. And it's also been a point right in here where we have made a big breakout. This is where we topped at the beginning of August, had a huge breakout on heavy volume. Look at the heavy volume as we started moving back down below this level. We failed here in early December, but we moved a little bit below the 20, but we did put in higher lows, and now we started moving back up. You can see the MACD is all the way back to center line. So I think we're at a key point here on Gilead, as we are with the biotechs and as we are with the XLV, which is the healthcare ETF. Probably, a pause here isn't bad, but I would want to see it hold this rising 20-day moving average. So 73, 75 up to about 74 is going to be key support to watch to the downside, and a move back up and clearing the highs from yesterday and today would be your bullish sign to the upside.
Okay, let's see. Our next one is CY, and it looks like a pretty nice short-term flag on that chart.
Yeah, short term, but this is a longer term bear flag actually, and it is below the 20-day moving average. but it's in that space I just talked about, the semis, which, many of those stocks have been hit really hard. There's a lot of panic going on. I don't think it's all justified. I think it's just what happens when a stock or a group gets so overbought. But if you take a look at the breakout here in October above these tops, you'll see that we've come back down essentially and came right back down to this level. So I'm not ready to throw in the towel here on CY. I would be watching though, because you are in a bear flag formation. If you fall back below 1475 and you do it on heavy volume, take out these prior lows, I think you want to be really careful. But I'm gonna say it holds, and eventually we're gonna get that breakout above the 20-day back to the upside, and that would be a bullish confirmation of continuation of this prior trend. So that's what I'd look for here.
Okay. Let's see here. The next one I have is CAI Industries International there.
All right, CAI. I don't like the fact it couldn't hold on to major price support and gap support. So I would have been stopped out of this one if I had traded it. And I probably, if I saw it and liked it, this is the range right in here. Whoops. Right at about the 3175 up to maybe 33 area. Right in here, I would have expected it to hold. And you can see we went down, we went below it, and the volume wasn't light either. So I think this one's got some work to do. Right now, I'd be out of this one. I'd have to see something bullishly to get me back in. I mean, I think you can see that a trend line here had broken as well to the downside. So I'm not completely giving up on it because I do feel like we're in a bull market in general. So many of these stocks that break down, I think will come back. But just my risk reward principles would have me out of the stock since it lost the bottom of gap support.
Okay. Let's see. The next one we have, and this will be number 6, is CBOE, the CBOE Holdings.
Yeah, CBOE is definitely moving up, at least partly because of Bitcoin. And to me, it's just gotten a little bit too far away from its 20-day moving average. So that just paints a riskier picture. It doesn't mean it can't keep going higher. So it's overbought. It's got probably $5 or so to the downside before it hits that 20-day moving average. I would just be waiting to see if I could get the 20-day test. So you can see as we've been moving up, I think it's pretty clear 20-day moving average has been a very, very important level. And yet when you look at it now, look at how far above we are, the 20-day. Again, I like the stock. I like the chart. I just need to see more selling so that I can manage my risk.
Okay. Let's see. The next one, number 7, is DVN.
DVN?
Mm-hmm.
Yeah, this is Devon Energy, and just disclosure, I own this one. Waiting. Mr. Schnell got me talked into energy. I got excited about energy. Actually, this is also a company that reported strong earnings, and you can see huge move to the upside back here. So I think there's accumulation taking place, and as long as I continue to hold on to the recent lows, I'm okay. So that was a level I was kind of watching, but then there was also the 50-day just below that level. So I'm going to bring those lows in. I think that's going to be pretty key right in here between about 36 and a half, 37 to hold on to. To the upside, we got to break the trend line. So you can see recently we've had these tops that have been coming in. And so depending on how you draw it, whether you draw it to the tails or whether it's candle bodies, whatever, still a downtrend line. What we want to see is continuing volume to the upside and maybe a close above $39. That would start to get me even more bullish in the near term. So that's what I'd look for with DVN.
All right. Let's see. The next one I have for you is OLLI.
Ollie. Ollie's bargain. Well, it's in a good space, and it is acting very bullish to me. It had price resistance and price resistance probably maybe about right in there as you look across. And then the move to the upside, look at the volume pickup. Even though we had a big volume down day, we didn't lose price support. We didn't lose the rising 20-day. And now we're bouncing off of that 20-day. I would watch 47. I think as long as the stock continues to hold over 47, I would have no problem owning it. Good stock.
Excellent. All right. Let's see. The next one, number 9 for our Canadian friends, CCL /B.to.
All right. Well, we're still waiting for a little confirmation. I mean, we were in a nice uptrend back earlier in 2017. Then we went in this downtrend. And to be honest, this is a stock, when I look at it, first time I look at it, I'd probably not look at it again. I just don't see it. It's just sideways. And I see too many stocks from my trading strategy, which is momentum. I see too many stocks in uptrends that I would be much more interested in. So for this one, I think, just getting back above the recent reaction highs and off of this low and this huge gap down, you can see the reaction highs are simply the highs where we've been since that move down. And so we're trying to break out above. I'd like to see a whole lot more volume to confirm. But I would say current price up to about 61, where the 50-day moving average is an area to watch. But for me, it's just a hold, I guess, more than anything else. I don't see a sell. I don't really see a buy. It's just more of a hold.
Okay. And let's see, the number 10 is SJM.
SJM. All right. Yeah, G doesn't look like J, right?
No, but I do that all the time too.
Okay, SJM, Smucker Company. I actually like this. I think we were in a downtrend. I love the big volume gap up. And notice when you get these long candle bodies, these hollow candles, many times on these gap ups, I always talk about the high end, the top end of the gap being support. And I think this one illustrates it perfectly. So here is your gap up from what, 106-ish up to about 111, 112. And then we continued rising all the way up to about 117 that day. 4 days later, 5 days later, you could have gotten it back down to the top of gap support. And as it got close to the 20-day moving average, it's now since broken out again and is sideways consolidating. I actually think price support now will come in somewhere around 116.5, and that rising 20-day is at 115.38. So somewhere in that range, I would look for support, and then ultimately another breakout above $120.
Okay, that concludes the 10 and 10 to 1. And we almost finished on time.
Almost. We got close. Maybe 11 and 11 and a half. 10 and 11 and a half. How's that?
All right, no problem. Let's see here. Let's get into our final market update here. I'm here. All right, I wanted to take you to our candle glance just to get a feel for what's going on across the board right now. And, we had a pretty decent rally, fell back, and now we're looking at negative numbers. I know the Fed announcement's going to be coming out soon. If I'm not correct, let me know, Tom, but that could be affecting it.
No, that was out actually on yesterday.
Ah, okay.
At
Somebody
2:00.
said we were getting one today. All right. So despite all of that, it looks like, we're in this declining trend now on the S&P 500. And I talked about it in my DP alert. We're looking at some consolidation, a pause right now, which we need. As we were talking about oscillators, we need them to oscillate lower and get out of the overbought area. Wilshire 5000 also declining. You can see these tops, that are falling down as they go. And you don't want to see those declining tops continue. We've got treasury yields up only slightly at 23.57. Dollar rallied nicely out of the gate, but has been falling back at this point. We've got commodities are taking a pause, but we could be seeing a flag with a pennant here. USO is up. It had a really rough morning, but has managed to get itself back to the positive, currently reading at 1135. Gold, again, wanted to hit the positive. I was looking at this double bottom and we were hoping for that break of the neckline, but instead it was turned away. I find that definitely a bit more bearish for gold. GLD at 119.02. Volatility index is hovering right around 10, currently reading at 10.08. Declines, leading advances. Let's go very quickly to our scooter movers. We haven't looked at those. I suspect we're going to see some familiar faces. Let's see here. Okay, so as far as our big mover today, it would be Tiffany. And maybe that's because I bought somebody a gift from there yesterday. All right, here we go. So we have that very nice breakout above what I would say was previous resistance, and a very nice move. PMO was already turning up. We'd already gotten a buy signal. Look at the OBV rising nicely. And now, of course, with the big scooter move today, we're almost getting into that hot zone. So that would be my the interesting one to look at as far as our scooter movers are concerned. So with that, I'm going to shut down the final market update, and we can move right into anatomy of a trade.
Yeah. Do you want to start, or what would you
I
like?
can start. I was in the midst of doing one, and actually, somebody had requested it for 10 and 10, so that worked out nicely. This is not a trade I have made. It's simply a trade that I would certainly consider making in the intermediate term, and I wanted to explain why. So, the symbol I'm going to talk about here is GREC. So, we're looking at the Greece ETF at this point. A lot of good things going on this chart. So I just wanted to explain what I would do as far as a trade here. And again, based on this more intermediate chart pattern, I think this is more of an intermediate trade. I'm going to also show you the weekly chart so you can get a feel for what that looks like as well. So what are the good things here? PMO buy signal in oversold territory actually occurring higher than it did the last time. So we're already looking at a nice move here. Look at the tops here and compare those to the price tops. They were declining, but the price tops were rising. So that's a nice positive divergence to see. And now we have a PMO above the zero line, and that is like the 50-day EMA being above the 200-day EMA. So that tells you that a nice bullish configuration going on for momentum. And it's working on getting there as far as the trend models are concerned. The 50 is above the 200. That's the purple above that dark blue. So, it's barely in a bull market configuration, but I think this is the turn. These are the ones we look for. A lot of people have said, well, how do you know when you're looking at these long term? How do you know when you're going to come back over and get a loser? What are your signs? Well, you can see even back here, the sign was this 50-day EMA turning over. And of course, that intermediate term trend model neutral signal was also a big clue. And we even had a clue before with this PMO sell signal. And again, look at the negative divergence on the PMO tops and the PMO or end price tops over here. So that would be my hint that the current rally was getting old. So in this case, we had the decline, and now we've formed what I would call almost a textbook head and shoulders pattern. I mean, this is exactly what I want to see when I'm getting ready to trade something. You've got, even look at the volume numbers, or even textbook. Your left shoulder, when it is formed, should have higher volume than when the right shoulder is formed, and that's what we saw. The head has got medium volume on it, and that's what you should expect. So this is pretty much, in my opinion, a textbook reverse head and shoulders. The 50s above the 200, it's scooping up and avoiding that long-term trend model signal. So that's a good thing. And you can see the 20-day EMA is just about ready to cross above that 50-day EMA. And that would give us a intermediate term trend model buy signal. But in addition, it would then put the EMAs in that bullish configuration that you want to see, with the faster EMAs on the top and the slowest on the bottom. So like the volume on this breakout, I just think this is a really pretty chart. Look at the scooter. The scooter is making a nice move here. So this, the Greece ETF is looking pretty good here. So once you have your head and shoulders pattern, what do you do to find out the target? Well, if those of you who watched my chart pattern video are familiar with head and shoulders, you know that you take the height of the pattern and then add it to the breakout point. So we got a beautiful breakout, even a gap above it. And look, currently it's trading above what I would say is some intermediate term previous overhead resistance. So I'd love to see a close above that 975 area. I think that would also be a great sign that this looks pretty good. So the target, though, is calculated, like I said, from the top of the head to the neckline, and then you add that to the breakout point. So just eyeballing it, you can tell that it would put us really close to the 1050, 1075 area, which is very interesting, right? Because it lines up perfectly with a resistance level. So I think this is your shorter term resistance level. Might want to set, set a target up here if you were looking more of a short term trade. I think you could make a case for this as more of an intermediate term trade. This is one I would probably hold on to. For me, intermediate term is a trade that I'd hold on to, I don't know, 2, 3, 4 months, depending on how it's reacting. So I like this daily chart. So let me go if I'm going to buy this. So I'm going to go look, right? I'm going to go to, I'm not doing this today. This is an example. I just want to let everybody know. So if I were going to go buy this today, I would want to see the weekly chart as well. So I'm going to go over here and get my chart style for the weekly chart. And I like it. I like this weekly chart. Again, this is the type of stuff you want to see. You've got PMO bottoms rising with the bottoms on the price. Again, that $11 range looks like a great spot for overhead resistance and a target. PMO is turning up above the zero line. And look at the 17 and 43 week EMAs. You got that turn on that the 17. I use the 17 and a 43 week EMA, and I know everybody's, what the heck? I just like the way that it reacts, Carl, and I like the way it reacts with it works very similarly to a 20-50 day EMA on a daily chart. So that's why we picked those numbers. So, but I'm seeing that scoop on the 17 week EMA, and you really haven't seen anything like that before. And the fact that it's happening above that 43 week EMA is very, very positive in my opinion. So I would be looking, if I'm going to get into this, I would be setting my target at about 11. And since it's an intermediate term trade, I would be looking a little bit, I wouldn't have quite as tight of a stop. Because it's more of, well, like I said, you're going to hold on to it for a while. And I think that the chart is positive enough to give you comfort in holding it for a little while. So, but our stop area, it looks like on the weekly chart, we would be looking at that 850 area for a longer term trade. But I want to go back and look at that daily chart and we can make a comparison. And remember, I was saying what the 850 area. So right here, basically at the head at 850, that would be, as far as an intermediate term stop, I would consider that. Of course, we're looking at a $9 to $8 move, and that's a huge move. So you might want to set your stop a little bit tighter than that, maybe at the, just above $9 where the shoulders formed here. So, I don't always use a trailing stop, but a lot of times I will pull one out, but usually it's on a move, a parabolic, or you're getting a really amazing rally here. And I don't want to get caught in a price shock or, a large drop. And I think trailing stops are really pretty good for being not so vulnerable to price shocks. And again, I also set them at kind of odd levels so that my stop will hit maybe before everybody else is at that even number. So that would be an anatomy of this trade. So I would be interested in your comments, Tom, and I'm going to go and read a few of the comments here in a few of those comments in the live chat box while you get yours all set up.
Okay, sounds good. Yeah, that particular trade, I don't trade ETFs very often. If I do, normally it's a sector ETF, only because I'm not really familiar with a lot of the international markets, and there's so much that goes into, trading international markets and not having the background in those areas. I like to trade things I understand better. So I tend to stick to like sector ETFs or an index ETF, the IWM, SPY, that sort of thing. But I'm going to go through 4 trades, try and go through these pretty quickly. 2 that didn't work and 2 that did. And so to try and give you a little bit of my thought process, why I got in, and why I got in at the price I got in, why I, either got stopped out, where I got stopped out, or why I set my target where I did on the ones that worked out. So I've got the first one's CarMax, and I'm going to go ahead and annotate and just show you, first of all, these stocks, all of these stocks came off of my strong earnings chart list. So I tend to trade almost everything that I trade comes off of my strong earnings chart list, which is simply a chart list here at Stock Charts where I find companies that have beaten top and bottom line estimates in their latest quarterly results. And I like their chart technically. A lot of times it's a great reaction to earnings. And I just put them in the chart list and then I just wait. And I wait until stock comes back down to a level that I like it. So here on CarMax, this was earnings. You can see the massive volume, gap up, huge candle. I love that candle. And so when I see something like this, sometimes I'll even move my the bottom to the tail that day. So in other words, it gaps up with earnings, comes back down. That's the lowest it trades that day with earnings, and then goes all the way back up. So as it pulls back, a lot of times I'll look in this range, but just to give it a little bit more room, I'll come down to the prior price high. So that would be price support going forward. So as CarMax made its way back down here, and I don't remember the exact price, but it was somewhere between 70 and a half, 71. It got back down not only to price support, but at that point, you can see that the RSI had gotten oversold as it was hitting what I thought was pretty good support. Volume had picked up, but it hadn't lost support at that level. So I was looking for it to make a reversal right here, and it didn't. And it was on one of these days. I don't remember exactly where, but I think I ended up getting out at maybe 68 and change or something. Probably lost 2 or 3, maybe 3% on that trade. I don't remember. My target would have been up here at the tops near 77. So the reason I'm going to get into this area is that I've got maybe $6.50 to the top side, and I was only willing to risk $2 to the downside. So again, it's a reward to risk type scenario. It just didn't work, and so I got stopped out. It has made a couple of attempts to move back up since then, and you can see today with this black candle right at the the falling 20-day moving average. I'm not really liking that either. At this point now, looking ahead, I think that's a price support along with the 200-day moving average. And for this uptrend to remain in play, it can't go back down, in my opinion, below this low right here. So you got a higher high, higher low, higher high, higher low. Here's your higher high. You can't technically go back down below this low. So anyway, there's a lot of lines on this chart. Hopefully I didn't confuse you too much. But the bottom line for me is I just don't like to risk too much. If it doesn't turn where I expect it to turn, then I get out. And so KMX turned out to be a loss. The other one that I had problems with, and this one I got sideswiped by, I think this is the one I got sideswiped by the Tesla news that they were coming out with commercial vehicles. And I think it was it might have been on this candle right here where I broke down, the volume started picking up, and usually I wait until the end of the day, but I got out intraday. And so on this one, I was looking for price support here to hold. You can see we came down, put a tail in below, and it was right around this time I got in to PCAR around 68 and change. And then it made a move back up to 71. I probably looking back, maybe could have taken some profits when it got above, close to 71, because here you had a prior low, and we came back up, tested that level. That reversing candle maybe should have, although we didn't lose support. So it's easy to go back and look and say, well, I could have gotten out here or whatever. But bottom line is this is the support level I was looking to hold. And as you can see, it went down. I think I may have held a little bit longer on this one. I'm trying to remember back, but I think the volume was light. And I was like, all right, we're going to get a reversal. And then we got this candle right here. And I was like, oh, because I remember getting back up above the support level. And I thought, okay, good. I'm glad I held. And then the next day is when Tesla came out with the news that they were going to manufacture commercial trucks. And stock went down. I actually got stopped out intraday, and you can see I helped to print the low on this one, which does happen from time to time. Gets pretty frustrating, but I try not to look back. And since then, actually, on PCAR, I think you got maybe an inverse head and shoulder on this move to the upside. Left shoulder, neckline, head, right side of the neckline, and a move back down maybe to around 68.5, 69 could put in a right shoulder. So you might want to watch for that on a breakout. But anyhow, that one is gone. I lost money on that one. And so let's take a look now. I'm going to show you two winners. I don't lose on all of them.
Yeah, I'm glad that I know people like that. I think I've even seen it in the comments, show us some that didn't go the right way so that I don't feel so bad.
Yeah, and both of those, if I had held, especially PCAR, would have, I'd be up on it. But you got to be careful getting into that routine of saying, "Wow, it's always great 2020. Hindsight's 2020. You can look back and say, "Wow, I should have held that one." But there are going to be some out there that you're going to be glad you didn't hold when they just completely fall apart. So I try not to worry about that. I try to minimize my losses, and that's the only way you can do it with any certainty is to follow your discipline. One stock that I had recently, and I still like this stock, IMAX, IMAX. I like this volume move here to the upside. And if I annotate this one actually worked out really nicely. But that was the resistance, and you can see the volume coming in these 2 days to break above. So when this pulled back, you can see right about the 20-day moving average. I actually was going to keep a closing stop underneath the top of this candle, which was at about 22.70 or so. And the stock came down to about 23. And actually, I think I got in right around 23 as it hit gap support and the rising 20. And I had to suffer through a day or so with it going just a little bit lower. But then it came back up, and I was looking for it just to get back to the top to test this prior high. So literally, it was maybe 6 or 7 trading days, and it was back up near 25, and I was able to get out. So IMAX turned out to be a really good trade. We got a breakout, pulled all the way back down, hit the 50-day, and came back down close to this price support, and then moved up again. But you can see that shooting star candle with that long tail from a couple days ago, and we've struggled. But I think any move back down, 50-day moving average, you can see throughout this uptrend that 50-day has been golden. And throughout the uptrend also, you want to look for RSI moves down into the 40s. So another move down 23 and a quarter or so, you'd probably have RSI in the 40s and be near price support. So this one actually worked out well. And then I've got one more. And I think I talked about this one. I know I've talked about it, but I don't remember if it was an anatomy of a trade. JD. And the reason I wanted to bring this one up is I loved that hammer. I mean, if I had a favorite trade, it would be a hammer in gap support off of prior, earnings related gap support. And so if I pull up price support, first of all, you can see here is the top of this gap. Here's the bottom of this gap. And I want you to see there is a beautiful hammer that comes down, hits the 50-day and goes below it, comes back up and holds. And look at that move back up after that. But the one I got in was actually right here. I loved seeing this move all the way back down to the bottom of gap support and then the hammer that printed. And this stock went all the way back up. Now, I got out as it approached 40. I think I got out like 39 and a half or something somewhere during this move up. Might have been, it's probably just below the 50-day moving average. I don't remember. But notice again, just recently, about a week and a half ago, stock went right back down to this gap support before making this move to the upside. And look at the volume that came in yesterday. So I'm kind of watching this one because depending on how you draw your trend lines, if we start from the top and we do the tails, you can see we didn't make a breakout. But if I take the candle bodies, this was a pretty big move to clear downtrend line resistance. MACD trying to go positive. I think the rising 20-day moving average is going to be pretty interesting on any pullback on JD, but we'll see. But those were the trades that I made. Like I said, 2 good ones, 2 bad ones. Some work out, some don't. For me, the key is well, I shouldn't say I don't care how often I'm right, because obviously you want to be right more than you're wrong. But I care more about making sure that I get solid gains on the upside and I limit my risk when I'm wrong to the downside. So you don't have to be 80% right to make money if you limit your risk on your trades. So that's the key to me. And I think the key to most successful traders is that you've got to be able to manage your risk.
Absolutely.
That is the end of the anatomy of a trade. You can see the symbols that we just went over. We are getting close to the end, but I had a question that I think it was from earlier this week, Aaron. I wanted to go over it. We didn't have time back on Monday. But the question was for you, and it said, does it matter to you which industry groups your PMO scan returns? So let's say, and the example was, let's say that healthcare stocks are on a PMO sell signal, but Merck, MRK, is a buy. Would you buy it?
Right. That's why I use the scooter, because it does tell me among its peers how well it's doing. And so I use that instead of, looking at the industry group, watching the industry group, and then, because they're good and bad within each group. And so I think the scooter gives you a pretty good feel for that. So typically, no, I'm unlike you. I mean, I don't go and look at all the industry groups and then pick one and then look at the stocks in it. I'm really more concerned about where are the EMAs, where's the PMO, what is it doing, what's the weekly chart look like, So I'm not necessarily, let's say, an industry group trader, and I think the scooter helps with that. I think that it does give you that, relatability as far as across the board among its peers in that group.
Mm-hmm. All right, good answer. A question that had come in I saw earlier in the room was why I use log scaling as opposed to arithmetic or linear scaling. So I've got an example, and so I'm going to just show you real quick on a screen the difference if you're not familiar with this. And by the way, if you go to the bottom here, you'll see the log scale is checked. So I am using a log scale. If you don't use a log scale, and this is on Riot, so I want you to, first of all, on the log scale, see the difference between 4 and 6, and then the difference between 6 and 8, 8 and 10. And by the time you get up here, 24 and 26, all of these are $2 increments. But what the log scale does is it puts it on a scale based on percentages instead of dollars. So 4 to 6, the distance between 4 to 6, that's a 50% increase from 4 to 6. That distance is the same as, say, from 10 to 15. So you can always, from a percentage standpoint, if you're looking at the slope of a move to the upside, to me, it's much more important on whether or not it's holding those percentage moves rather than just arithmetic moves. So let me get rid of this log scale. I want you to look at Riot, and you probably can't see it on a lot of stocks. Let me update there. You probably can't see it on a lot of stocks because you don't get huge volatility, but you can really see it on a stock like Riot, where you have these big moves. Now look at 4 and 6, 6 and 8, 8 and 10, 24 and 26. Now you can't tell if it's in an uptrend, or at least I can't, based on percentages, because it's now you're using the arithmetic. So it's just personal preference for me. If you like arithmetic, then I would stick with it.
Mm-hmm.
But I can't find that slope of the moves to the upside to see truly when the trend line is breaking based on percentages. So hopefully that's not too.
Yeah, I know. I don't use the logarithmic on dailies, but I think it's really critical to use them on a weekly and especially a monthly, because otherwise, you can't determine what is truly a basing pattern. Because I mean, look at that Riot chart you just showed. It's like a little line all the way across. Looks like a great basing pattern, but maybe it wasn't. It's hard to tell. But when you move to a weekly or a monthly, I always use it for that. But it is personal preference across the board. So,
all right. Well, that is it for the day. It's unbelievable. Another day is coming gone that fast. But do you have any final thoughts today?
Oh, goodness. Final thoughts. I continue, and I showed you that NASDAQ 100 chart earlier. I'm still really watching the NASDAQ. I want to see if it's going to kind of get with the program. Right now, it looks like it is. But I'd like to see that PMO buy signal come in, and I've just been waiting so patiently, and it's still not here. So that's what I'm watching for, because I like to see all the markets, small caps, major indexes, and technology in the NASDAQ. I like to see them all towing the line, and we're not seeing that quite yet. I liked what you said, though, about small caps picking up at the end of December. So I'll be watching for that. That's interesting to know.
Yeah, that's coming up here just in the next couple of days. I mean, we switch over this, Friday. Tomorrow will be the 15th, so we switch over, and starting from there, the Russell 2000, at least according to history, we should start to see things really pick up into year end. So that will be interesting to watch as we go forward. Again, just a couple quick announcements. Tomorrow, I'll be doing a segment on price support and resistance. Would love to have you join the show if you can. And this weekend will be our second and final Chart Watchers newsletter for December. So you can get the latest on what everyone thinks here at Stock Charts on what's taking place in the market. So be sure to check that out this weekend and be ready for that. And That's it. The show is a wrap. I want to thank all of you for being with us today. Remember to complete the survey as you exit. It's in the lower right-hand part of your screen. We love to get your feedback and hear what you think of Market Watchers Live. As a reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Thursday afternoon, everybody. We'll be back tomorrow on Friday. Happy trading.